Ladies and gentlemen, I'm WKF of Kearney, the moderator of this session. It gives me great pleasure to welcome you to China as Global Growth Motor session. Let me firstly introduce the participants of today's discussion. Please join me in a round of applause when the participants are introduced. Firstly, Dr. Bernard Hartmann. Dr. Hartmann is the main speaker of today's session. He's currently leading a Greater China unit of Kearney, a global management consulting firm. He received PhD of geology from Bernald University in Germany and used to work with global companies such as Bernald and Mobile. And Mr. Haibo Huang. Mr. Huang is the general manager of M&A department of Shanghai United Assets and Equities Exchange. He's a legal attorney and one of the most well-known M&A experts in China. He graduated from Hartmann University, majoring in law, and also studied business administration in Arizona State University. Dr. Fan Chen Meng. Dr. Meng is Senior Vice President of Siemens China and also General Manager of Siemens Shanghai. He received his PhD in economics from University of Bochum in Germany. And as you may already know, Siemens is a major foreign investor in China. And for Siemens, China is the biggest investment destination among its all overseas investment destinations. Lastly, Professor Dongjae Kim. Professor Kim is teaching international business in Yonsei University. He received PhD in business from Wharton School. He's a globalization expert and is very closely working with major Korean companies to help them build globalization strategy. Where is China going and what does it mean for foreign investors and for Korean companies? This is the question that we will address and discuss in today's session.
Thank you very much for this kind introduction. Again, also for me, of course, it's a pleasure to be here to present China and China's potential role as growth engine for Asia, but overall for the global economy. And it's always positive to see that whenever China is on the agenda, you are assured of a big crowd that is listening. So it's a pleasure for me to welcome you. Maybe as a starting remark, if I discuss China and the specifics of this economic powerhouse with foreigners, it's quite often interesting to note that there is a substantial gap between the outside-in perception about China and the reality that we face when we, in our day-to-day businesses, operate in this country. So I hope. So for today's presentation, I put a few slides together reflecting on my experience working in Shanghai. And I hope that the points that I will address will provide a very good platform for the later panel discussion. I would like to start to give you a few insights about the general macroeconomic issues of China, but then really focus on two topics that should be of strong relevance for Korean investors in China. First, reflecting on the experiences foreign investors have in this country, and then address a more recent trend, Chinese companies going abroad, trying to develop substantial investments outside of their home country. How successful will this trend be? How strong will that trend be in the end? And then summarize and try, from my perspective, to give some insights about where could be the best investment opportunities for Korean companies in China. If you look at China, I think we all are aware about the mind-boggling figures that we see about growth. GDP growth always double-digit in the last 15 years. But I think it's even more rewarding to look back a little bit more in history, almost back to imperial times in China. Traditionally, China as an economy always had around 30% share of the global GDP. And I would like to start really with a statement: there is no real argument why China should in the future not again have 30% share on global GDP again. And we see in many of the key industries, if you look along the value chain, if you look in more mature industries like textile, IT manufacturing, steel, heavy industry, China already has a substantial position, as you all know, sometimes more than 20% of the global value proposition there. But we also know that China is not an easy story. There are very much fundamental issues of macroeconomic nature that we see that need to be addressed to make or to give China a successful future. The economic side of it, of course, China has 1,300 billion US dollars in foreign reserves right now in the country. And if you combine that with a very immature financial system, I think that is certainly an issue that needs to be addressed. We all know about the real estate bubble. If you want to invest in Shanghai, if you want to invest in Beijing, I would not really recommend to buy property right now there. And the next bubble is coming up in the stock exchange. Some of the recent listings are producing amazing results. How sustainable it will be, we'll see. There are also, of course, more general political issues that need to be addressed. China is a very socially unbalanced society. There is a big wealth gap opening up. China is, from a regional perspective, also very different. If you know Shanghai well, you know very little about China. I think that's important to understand. Also, the overall governmental sector is certainly inefficient and is in need of restructuring. And if I look at those political issues, a lot of them I haven't even listed. China has no real defined healthcare system. It's very unclear how the pension funds will be structured in the future. A lot of it is really, so to say, under construction. On top of it, very threatening in a way if you live and work in China is the overall deterioration of the ecological system. China now has 16 of the 20 most polluted cities on the World Health Organization list. And this, of course, has a strong economic impact in the future. It will cost China substantial GDP growth to address that issue. Just, as I said, a few points. But it's also very encouraging to see that the Chinese government, that the Chinese leaders are well aware of these problems. When you look at President Hu Jintao's speech at the party congress at the beginning of this week, if you look at the agenda, it's about sustainability, it's about developing a balanced economy, it's about move into more innovative industries, go away from just providing low-cost labor to the world. It's really addressing many of those issues that I earlier mentioned. And given the overall speed that China normally puts on the ground in changing, in modifying the system, I'm personally quite optimistic that many of those issues will be addressed in the future. If you now discuss with the business leaders, what do they think about China? And A.T. Kearney, for the last 15 years, works on what we call the foreign direct investment indication, where we interview many of the global business leaders about their level of confidence. Where do they want to invest in the future? Where do they want to spend their money? Since 2002, China is heading this list, taking over from the US. And in general terms, there is a lot of growing confidence